In your opinion, how many investors out there, mums and dads and people with their first jobs, etc., that ultimately, whilst they may not see it yet, but further down the track, they're going to be retired? How would you describe their decision-making process?
Well, most people, human beings, react to short-termism. They react to more recent events. They really have confirmation biases embedded in their psyche, which means that they're going to react more to things that confirm decisions they've already made, rather than and they don't like hearing any input or data that would get them to do the opposite of what they've done. So what happens is and that leads to a highly subjective decision-making process. So people who are in retirement, would have made some decisions going into retirement, and they would want to hear a whole bunch of input that confirms what they've done is the right thing, right? But at the same time, they've got the risk, if you like, the fear sitting on the other side, that they know what the downside potential is, what the negative potential is of which is the flip side of any decisions they've made. So there's this ongoing battle going on in their mind all the time of, gee, what I've done is the right thing, but it could all be undone if this happens. And they know that this, whatever it is, basically the market having a crash is always alive and well and sitting in the background that could happen at any given time. So we've got this, there's a need to be invested, there's a need to get income, there's a need to get returns. So sitting in cash isn't an option. Certainly not all of your money sitting in cash, but at the same time, there's this ongoing fear lurking in the background, like the sword of Damocles hanging over your head. This big negative event could come at any time.
Yeah, absolutely. And I think for a lot of people that are listening and watching, or the probably the most current example of that is 2008, 2009, where we had a significant bear market, where the markets did drop away very, very rapidly. And I think from that point of view, that would be experience a lot of people could relate to. People who are about to retire and sitting through that and thinking, well, hoping that things were going to be okay. So how would you describe hope as a strategy, as a decision-making process?
Well, as human beings, we all need hope. There's no doubt about that. And we do need hope in other parts of our life. And when things are going really badly in other walks of life, then hope is a powerful thing. There's no doubt about it. But you need to base your hope on something. It can't just be anything. It can't just be, I hope it's going to happen. When it comes to the market now, some kind of basis, and even outside of the market, some kind of basis, some kind of evidence-backed process or platform, if you like, that you can pin your hope in. And that's really what we're on about. You can't hope on something that you don't have evidence on, is really what I'm trying to say. And that's what we try and do. We try and provide evidence that there's something to pin your hope in, to pin your beliefs in, if you like, and with respect to investing, that is, and it's all numbers based. There's no other way to go. I mean, the stock market is numbers. It's everything about it is numbers. It's all the fundamental data is numbers. All the price is numbers, correct to 2 decimal places, and for some stocks correct to 3 decimal places. So that's where you go to. You got to go to somewhere, some platform, some bit of logic that you can pin your hope in that has happened in the past. And when you get to that way of thinking, when you start thinking in terms of probabilities, it starts becoming less hope and more factual and more certain. Now, I'm not saying it becomes 100% certain, but it's certainly a lot more certain. And I know it's certain that feels like 100% on, 100% off type word, but there are degrees of certainty as well. And the degrees of certainty rapidly rise when you've got some evidence-backed, evidence-based platform that you can pin your hope in. And it goes being from mostly hope to mostly higher degrees of certainty that you can prevent big drawdown, but also come out of drawdown, the drawdown that you do get into when the markets go through bad periods.
So how would you describe the process, the regime that Sharewell Systems provides compared to that of a buy, hope and pray type of scenario that a lot of people use? use?
Well, obviously it's all numbers based, so it's all statistical. Probability is effectively what it comes down to, and it comes down to doing lots of number crunching and research on concepts, that find trends and stick to trends, and we build, equity curves of portfolios which are based on probability. But we also, if you think of the curve, that, where you've got, you have loss trades and you have profit trades, you have a skewed probability curve, if you like, that has what we call a long right tail, where effectively you're relying on winners, roughly half to even slightly less than half of the time where you're winning. But because you let your profit trades go, you have this kurtosis in your probability outcomes, that you have this long right curve where you have, the large profit trades that occur every now and then, but you also cut your losses. And on the left side of the kurtosis is where you have your loss trades, but they're smaller. So you have roughly half to probably a little bit more of your trades are loss trades, but they are smaller loss trades. And you have these fewer, around about the 45, but sometimes doing what the market's doing, you get to 55, 60% winners, but they have this long right curve, long right-hand tail, which is what the big profit trades on. You've got to let those go. And that's effectively what we're doing. We are trading, we are making decisions, if you like, trading decisions based on probabilities, historical probabilities, historical statistical edges. And then we get to a point in time, we go, that's the edge. Now we're going to execute this edge. And so what we do is there's when to sell, there's how much to buy, depending on how much capital you've got. And of course, there's the when to buy, which is when you buy, and there's the what to buy, which comes out of the universe of stocks that are kind of pre-chosen. And so all four of those, only four decision-making decisions that you've got to make in the market are in that order, what to sell, how much to buy, when to buy, and what to buy, and that order is what we have the importance. I mean, we get feedback from our long-standing clients. The when to sell, people say, we ask them, why do you use our service? And the when to sell is right up there at the top, for a lot of long-standing clients. They know when to sell.
Yeah.